Welcome to BWC News. I am Elizabeth. As you know, the US has been raising interest rates since March of this year and has now raised rates by a cumulative 425 basis points. With inflation cooling off, the Fed could reasonably reduce the pace of rate hikes next week. Futures prices linked to the Fed's policy rate show that it is almost certain that the Fed will raise the benchmark rate to 4.5% to 4.75% in February. And by March, after another 25 basis point rate hike, traders are betting that the Fed will end its rate hike action in March. This is likely to re-establish a new pattern of harvesting for those fragile markets that are highly dependent on dollar-denominated debt as dollar capital comes to an end of the current harvesting cycle. Regardless of the monetary strategy adopted by the Fed, for fragile markets with high foreign debt and low foreign reserves, they do not have the initiative in their own currency. As former U.S. Treasury Secretary Connolly once said, "The dollar is our currency, but it's your problem." After the U.S. led the West to achieve a price limit order on Russian oil, it is unexpected that India continues to import large amounts of crude oil from Russia, which has caused strong dissatisfaction in the U.S. in recent days. India's stock market has seen a significant drop and the exchange rate has seen a rapid wave of depreciation. Will the fact that India is still happy to act as a middleman for Russian oil lead to an accelerated harvest of India by the US? Yesterday, stock markets in Asia performed normally, with Hong Kong stocks continuing to rise sharply, but India's Mumbai index fell by a maximum of more than 1,200 points and was down for 3 consecutive trading days. On Tuesday, the Mumbai stock index peaked at 61,263 points, but yesterday it was at a low of only 58,974 points, the biggest drop in 3 trading days of nearly 2,300 points. If compared to last December's high of 63,583, the Indian index has fallen by nearly 5,000 points in the past month and a half. Meanwhile, in the past week, the Indian rupee has seen a continuous wave of declines against the dollar, depreciating from 80.88 to 81.78, reversing the previous 4-week trend of gains. It seems that overnight, the Indian financial markets are once again shrouded in dense clouds. India's fiscal year runs from April to March each year, and the last fiscal year saw a growth rate of 8.3%, making it the highest among the major economies. But from April 2022 to March 2023, India's GDP growth has slowed significantly to an estimated 6.8%, well below the previous fiscal year and also behind the 7.6% growth rate achieved by Saudi Arabia. India is no longer the champion of growth. The rapid growth of the Indian economy in the past has been associated with several reasons, one of the main ones being that India is attracting foreign investors. In the midst of the global economic crisis and the saturation of markets around the world, India, which is still developing, has become a gold rush for many large companies. So, behind the rapid economic development is the rapid growth of investment and consumption, but also accompanied by inflation and increased GDP. But with the Federal Reserve turned off the tap, stopped printing money, the development of the Indian economy has also encountered difficulties. Indian officials have released a figure that by the end of November last year, overseas investment institutions have sold more than 20,000 billion rupees in the Indian stock market, which means that a large number of foreign investors are withdrawing from the Indian financial market. Check the past history. In 2008, when the subprime mortgage crisis, there was also a massive withdrawal of foreign capital, but the scale of withdrawals so far this year is 250% of that year. Especially in this current situation, the US restrictions on Russia seem to be difficult to achieve results, and it is likely that India will be used as a scapegoat. If the Fed continues to tighten its policy and more money is withdrawn from the Indian market, then India needs to find new ways to respond. Modi said that India will become a rich country in the period of 2022 to 2040 and will complete a historic leap from a developing country to a developed country. India's current economic development is a booming one. Compared with other countries, India's ruling party is firmly established in the country, and the political power under Modi's leadership penetrates from the center to the local level, which is a solid guarantee for India's economic development. The Indian government has become the second largest producer of cell phones in India in cooperation with other countries. India is making efforts in new energy vehicles, pharmaceuticals and other fields to move European and American companies from India to other countries. But it is clear that these alone are not enough. The above efforts have given India's economy a high rate of growth in the past, but they cannot guarantee continued growth in the future. But after the European conflict in 2022, especially when the energy crisis in Europe became more and more intense, India found a new growth point. India has now become the largest importer of Russian crude oil and has said it will import more as soon as the price is right. On the one hand, India itself is the third largest consumer of oil in the world, and on the other hand, because India has discovered that there is a huge profit margin. At present, Indian refineries are continuously importing Russian crude oil cheaply, and then converting it into finished products such as diesel through processing, and exporting it to Europe in large quantities for super high profits. And according to British analysts is that at this time, the Indian economy is in the most urgent situation in 27 years, it is likely to return to the economic situation in 1996. This also means that the Indian economy may face the risk of regression 27 years, and may even decline back to the original form. India's future economic development will be how, depending on whether the United States really want to completely harvest it. It's the end of this video, thank you for watching, please subscribe to the channel to support, see you next time.